Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bearish scenario where we are looking for a three-wave structure to the downside in an ABC or a WXY. As price hit the 886 taken from the high to the low of A or W, a wave 1, 2 and then a wave 3 has very low probabilities because the 886 is a rare target for a wave 2. This increases the probabilities for a B or X and a move down in a C or Y. In a wave C we want to see an impulsive structure to the downside, and in a wave Y we only have two options left. Wave W here can only be a zigzag or a flat. In this case it has to be a zigzag, which means that for a wave Y now, because it retraced to the 886, which gives very low probabilities for another zigzag in a wave Y, probabilities are highest for Y to be a flat structure or a triangle. In both cases, however, we are looking for a sharper move towards the downside. Inside B or X, we are then looking at a finished zigzag structure to the upside. Here we have a three-wave move, ABC 535, and just because in wave B there is a triangle, the target area for wave C is between the 0.618 and the 1-to-1, 45.1 to 48.1k, and you can see the 48.1k level, the 1-to-1 here, has been hit, with the 1.236 being a less common target. In this scenario, we are then looking at this five-wave structure to the upside in a wave C, as this over here was the end of your triangle, so this was the end of your wave E. We're counting a 1, 2, 1, 2, 3, 4, 5, 4, and then eventually a wave 5, ending the structure, and we're looking for a move towards the downside. What is important is that locally we are then looking for either an impulsive structure to the downside, so 1, 2, and eventually 3, 4, 5. A diagonal structure, 1, 2, 3, 4, 5, creating a diagonal, then a retracement to the upside and a move down, which could be interesting during the weekend, or a double 1, 2, wave 1, 2, 1, 2, and then a move down. In all of these scenarios, what I prefer to see is bearish CVD divergences. Show me some signs of weakness, market structure change, volume increasing to the downside, bearish CVD, RSI, whatever you use, but it is important as these levels, because continuation is definitely on the cards, as we are very high to 49k, and we are currently still above the range value area high, as well as this resistance area over here as well, which can now act as support. So losing this would be a step one, no? If we then go to the bullish scenario, we are looking for more upside. In this scenario here, we are looking for a wave A, B, C, or a 1, 2, 3 and higher prices to come. Because this retracement here was so shallow, this range, with the fibs taken from the low to the high, 0.236, 0.382, probabilities are a bit higher that this is a wave B compared to a wave 2. Common target for your wave C is between the 1 and the 1.236, but also the 1.618 is still quite common for a wave C at 50k, where you have the 1-to-1 here at 47.6k. Of course, for a wave 3, usually the 1.618 is your minimum target at that 50k, 51k area. We are very close to the high here as well, so you can imagine that for this wave C, it might be interesting to take that high. In this particular scenario, your low of B over here is one more low to the left. So instead of this one with the triangle, you now have this low over here. And that means that locally we are counting things just a little bit different. Here on the chart, you can now see we are still looking for a wave 4. We have a bit of a range over here in a wave 2, looking for an impulsive 3 to the upside. And then we want to see a range in a wave 4. Fibs are taken from the low of 2 to the high of 3, 05 to the 236 is the common target for a wave 4, 46.9k to 45.5k, with the 0.618 being an invalidation for a wave 4 at 44.8k. After a wave 4, we're going to be looking for a wave 5 towards the upside to finish eventually a wave C or a wave 3. Now, what is interesting in combination with this scenario is that we hit the 886 as mentioned earlier. What happens on the lower time frames quite often, and what you will know as a regular viewer here on the channel, is that after price hits the 886, it quite often likes to retest the golden pocket, which is also taken from the high to the low. So it's the same pool. And what's interesting is that the golden pocket is in confluence with the 05 at about 45.5k, which also, by the way, was the high of the daily gap. So that might now act as a support. So definitely keeping an eye on these fibs level over here and the golden pocket in confluence with the 0.5. Now this more bullish scenario can still lead to a bearish outcome, because if we are looking for a wave A, B, C, three-wave structure to the upside, also because of the shallow retracement here, then it increases the probabilities also for a flat, which at the moment, right, between the 1, 2, 3 and the ABC, we still have to wait patiently what the range is going to show us. And if we move up over here, we'll wait and see what we get, right? But this scenario, we have to think about it. 3-wave A, 3-wave B, 5-wave C. Minimum target for a flat has been reached. It's the 0.9 fib taken from the high to the low of wave A. This is a very rare target for an expanding flat, and an expanding flat is the most common flat pattern out of the three flats. A, B, C, expanding flat over here, B above A, C below A. Then we have a regular flat in an A, B, C, which is more of a ranging structure. And then you have a running flat in an A, B, C, where eventually wave C doesn't take the low of A. That is the least common pattern. Here we have then an expanding flat on the chart, simply because usually it's the most common one. Most common target for B, 1.236, 1.38, 51.6, 53.1K taken from the high to the low of wave A, right? 0.9 minimum target for a regular flat. So we have to keep an eye on a potential wave C down, but preferably you're going to see a little bit more upside. The 105 at 49.6 is a less common target, and the 1.618 at 55.6K is also a less common target. What is quite interesting, confluence here, is the monthly gap, because you can see the common target area for a B is also in confluence with the high of the monthly gap. So we have a gap on the monthly chart, and we have now touched this gap for the third time. This is your gap over here, right? First touch, rejection, second touch, rejection, and now we hit it for the third time, which definitely increases the probabilities for price to fill this gap over here sooner or later. So if we then look at the probabilities of the different scenarios, then on the low time frame, when we look at this structure over here, probabilities are very high now that price will sooner or later take this high. However, locally it's now weekend, so we can expect a bit of a range, and we keep an eye on that golden pocket here as well for a potential retest. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.